This conference will now be recorded.
Good evening, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 8:35 p.m. on January 15th, 2020. This is a strategic midweek, excuse me, a strategic midweek webinar. Session will be recorded, uploaded to the Google YouTube channel. Lately, I've been having some delays in uploading to the Google YouTube channel for reasons beyond my control, partly because of some different algos that are running the Google, the YouTube videos. Um, I, however, go ahead and post the GoToMeeting link. So any of you on my real-time Twitter feed, you can click that and listen to the same video without having to go to the Google YouTube channel. However, even after the delay, the uploads do work, but just letting you guys know. Full disclosure, this is purely for financial education and not for any solicitation or advice. Quick reminder, follow us on Instagram at clueless8_trading. Option charts are posted there at the end of the evening. Some highlights of some of the trades that we do, and it's pretty exciting to see, and it's also very useful. On that note, let us begin. So we have one member here in attendance. Some others might show up or not, but everyone can listen to this afterwards as I post the recorded video cast. All right. Today, let me just go over a couple of quick things here. What I want to do is basically focus on charts today. I don't want to get into the heavy-duty technicals or anything like that. I just want to cover as many charts as possible and try to keep this within a reasonable time frame of 45 minutes, if not less. Most of my video casts go over an hour because we cover so many important aspects of the market and individual stocks. But let's see if we let's attempt to keep it on the shorter time frame tonight. So here we are. Let's go through these very precise, dynamic, and very accurate market charts, which help us in managing our trades when when we're starting to sell off, when we're starting to move up, whether it's a real sell-off, whether it's a fake one, and similarly, what is it, a fake rally or not? Well, all these are depicted in the 15-minute charts, as you can clearly see. We are still within the rising wedge here. You can see that, and is just like magic. That's the beauty about structuring these charts here at Clueless 8 Trading. Just like magic, it came down, retested, and I put that down too on my Twitter feed. So highly recommend it for your own benefit and money-making abilities to understand what's going on. A lot of the times I actually explain the technical reason what I'm looking at, as to why things are happening or why I'm looking at it. And important that you guys try to focus on it as much as possible. This is, remember one thing, very important thing. Trading is not an academic exercise. Anyone can paper trade. All right, there are a lot of traders who say, well, I've been paper trading with this and this, and I'm doing really well. Well, paper trading, in my opinion, is completely worthless. Why? Because real money is not involved. So your emotions are not involved. When your emotions are not involved, that means you can always do the right thing, right? Because you don't care if you lose money or not. It's all paper trading, right? It's good for practice. However, I don't think it's great in the real world. So saying all that, basically what it did, which was almost picture perfect, is the market pulled back in the afternoon, retested this bull flag. This green shaded area obviously is a bull flag. Here was another one. And I did say that we're going to break out of the bull flag, and that's exactly what happened. And we hit new all-time highs. So we came back, we retested the downtrend line or the upper end of this bull flag, which also happens to be the lower range or lower inflection point of the rising wedge. If we had broken this, then we would have gone down to the next red line and the next red line, and I put that repeatedly in the form of support. Most of the times, to be honest with you, I don't need to even put anything because the charts are so well structured with the resistances in green and the supports in red, the patterns, the gaps, that I don't even need to explain anything. You guys can just, look at it and figure it out. So, and I know many of you do. So the bottom line is that the supports are right there, 32.75. Then there's a big this is a major support. That's a gap fill. You can see here. That's a gap. And that gap is around 32.64. So let's say we had dropped from the highs today, which was close to 3,300, just a fraction less, from 3,300, and we fell all the way to test this gap, which really wouldn't technically break the uptrend, but it would be damaging to options traders or investors. There would be mini panic in the market. So if we had dropped from roughly 3,300 down to 32.65, that's a drop of 35 points. 35 points, as you all know, is roughly, so that would be a drop of 35 handles, 35 S&P points, 35 E-minis, E-mini points. And I normally take a factor of 35 times 7, roughly, to see what the Dow Jones would do. So we would be down 245 points. All of a sudden, you would hear screams of panic, all kinds of stuff, and the market would have come back and retested this major support, which has been support here, was the support there, just within the past week, and even since Monday, and we'd have dropped 244 points and really wouldn't do anything. However, if you're not managing your trades right, then all the profits that you are generating on multiple trade alert winners would have completely disappeared, and you'd be sitting on a pile of losses, which would be mentally not very good, right? So bottom line is that from a technical standpoint, it's not that damaging, but from a monetary standpoint, it is damaging because you'd go from being in a very nice plus column at the market open to a very somewhat of a deep negative column, and it wouldn't feel that good. And especially if you have any options expiring day after tomorrow, then you would be very anxious and scared because the time value is running out, the theta is running out, and all of a sudden you just don't have anything in there. So saying all that, following the charts is extremely important, and of course the dynamics of the internals and the dynamics of how it correlates with the externals, which I'm not going to get into tonight. I've had multiple videos on that, instructional videos on that on the Google YouTube channel. Highly recommend that every single new member check them out, new member introductory videos. And if you don't, well, I think it's going to hurt you guys. So that's it. So far, so good. Nothing to report here. Let's take a quick look at let me download the chart. This is your SPY chart. That was the futures chart, but this is the SPY chart. This is what the SPY chart looks like. Okay, so just like magic, and this is the reason why I pretty much never panic. Why? Because I don't feel good sometimes when all of a sudden there's a massive sell program and I'm long on certain positions. But do I panic? I don't think so. Okay, because panic is for losers. You know, when you panic sell or you panic buy because you missed out on a trade, it keeps on going higher. You're gonna get killed. Simple. So bottom line is that here was a breakout level from the 14th, which was yesterday, right when the market opened. So we went up, we went below that, but this is that breakout line. That's why it's in a darker green, thicker line, right? Those are the major breakout levels. And all the market did, as you can clearly see, no magic. It came down, retested that, and then rallied pretty sharply after being negative at one point, right? The market was negative at one point and rallied, and this green candle, basically the Dow Jones landed up 91 points. So you got to understand this stuff, all right? You got to follow these things, and it's not for fun, all right? It makes you a lot of money. I'm not asking you all, you can do whatever you want, but I'm not a 5-minute trader, and I'm not going to basically play each of these candles through SPYs or any other vehicle unless I have enough time to just fuddle around and you play with less money, because these things happen really quickly. And this is not even a real sell-off. It's just like, it's just coming back, retesting, 3 candles, market drops down about 100 points. Sure, you can play it intraday via different short instruments, including put options on the indices, and you can make some quick money. So definitely, but if I feel like it's a real drop, then I'll go ahead and recommend it. But if it's not, I'm not going to bother with it because it happens very quickly. So you with me so far on that, Z? Did you
Yes,
understand what I,
yes, I
did
was
you
mhm,
did,
yes.
did did you understand what I just explained?
Um, yeah, a lot of people are playing those little 5 minute candles and technical
Listen, there's also
mm,
all kinds of traders. There are 1 minute traders, there are 5 minute traders. I've traded really fast on some fast moving stocks, and in 15 minutes I've made it, a decent sum of money. But generally I don't. So it's
uh,
completely up to you what your style is, because I don't have enough time and energy to play 5 minutes and 1 minute, because I have to run a full service and help my members make
yeah,
some real money. Okay? And so I really don't have time to do that. But if somebody wants to do that, sure. And then, like you correctly pointed out, many people do, and good for them. Now,
it,
how
it
what
drains out. It drains you out a lot. Yeah.
it's not just drain. It, honestly speaking, in my opinion, is for pikers. You know what pikers are? What pikers means? That somebody who's playing with very little money, and there's nothing wrong with it, and they're trying to make very little money. I just don't have the time for that. I'm not going to trade something for $60.
Yeah.
And other people do that. That's fine. I want to trade something for $600. I want to trade something for $6,000. So anyone can do whatever they want. In fact, my charts are geared to cater to everybody. So they can use these charts to trade 5 minutes, 15 minutes, 1 hour, whatever they want. I'm just simply saying that I don't cater to that type of, a monkey on a hot tin roof type of trading, because I just don't think that I just don't have the time commitment to do that. So because we are not a day trading service, we day trade, we swing trades. Most of our big money comes from swing trading, from the trading aspect. And of course, our forecasts are 100%. We're right there on the ball. So that's it. So just wanted to mention that. So if anyone else is listening to that, use my charts to trade 1 minute, 5 minute. You have your own charts, think or swim. They do, you can do whatever you want. But I just can't put out those recommendations, suggestions. So glad that everyone understands that part. So saying all that, not to say we don't do day trades. Of course we do some day trades. And they're fast, they're furious, and they're quick. So, but that's not the majority of what we do. That's all I'm trying to say. So here's your trading band here on the SPY. It's very defined. The lower end is around 326, 327. Yeah, about 327. The upper end is around 329 to not 330 yet. So we got 2 points here. 2 SPY points. That's roughly about 20 S&P points. Okay? And it's very clear what I just showed. See, that's your trading band. That's your trading, excuse me, that's your trading band between now and Friday. It breaks this, then you got lower levels to contend with. Each of these support levels will be hit. Guaranteed. That's a guarantee that each of these support levels down here will be hit. The dotted lines are the gaps. You can see that. And we could very well retest the gap. There's a big uptrend line going all the way back to, not too far back, all the way back to, yeah, till the beginning of the year. This is December 31st. That's a major uptrend line, this green line here. 1 second. Let me make it very thick so everyone can see it. And let's clear this. So there's your uptrend line, and that uptrend line happens to be right here near the first real gap, and that is at around 325. So 327, 325. So that's another 140, 150, 200 points. So that's the way it goes. But because the charts are so structured, I know pretty much what I'm dealing with. And the only reason I do these webinars and stuff, so I hope that you guys can understand some of this precision work that is being delivered for your own benefit. Because if you guys don't understand these charts, or don't attempt to understand these charts, the market's going to fry you guys. And it's fried many of you. And some of them who got fried and refused to respect these absolutely precision, predictive, analytical charts have either quit being a trader, and some of them have just left the service. And that's fine with me. So focus. That's it. Let's move on. So this is where we are right now. I don't want to go into long-term charts, whatever. I just want to show you guys this. We're good to go. Uptrend is still intact, but markets are short-term, very overbought. I explained that very clearly on my past webinar. And I'm not chasing the same old usual suspects all day long. I'm making tons of money for you guys. All right, and making very decent money for myself, trading names that no one talks about. Whether it be Clovis, I was in an important business meeting this morning. I sold it off my iPhone. Calls went from 60 cents to $2. Now you go figure. If you have a decent amount of calls, you're jumping around saying, that's it. I'm just taking the day off. If you just had like one call at 60 cents, because that's really what they were, 60 cents, 70 cents, you need to have some size. If you don't have size, you're not excited. I read traders like an open book through the computer. All right? I know exactly who's making money. I can tell by their vibes. So when somebody says, yeah, I own it. Yeah, I own that. That means they don't own enough to make even lunch money. And you know, Clueless Ape Trading, we're straight shooters here. We speak the truth, whether you like it or not. So if you don't have a half decent amount, then you didn't make anything. So the stock could be up, which it was. You know, let's take a look at Clovis. So Clovis was up a gazillion points from like $8. It closed yesterday at $8.90, went to $11.18 at the high. So let's do this. $8.90 it closed at yesterday. So it was up almost 13%. And the options went up more than 200%. They went from, and we're going to take a look at it because it's important. So let me just pull up the chart first. Because that's another thing about options trading primarily, and of course all kinds of investing, but in options trading, if you don't have a decent position, you're never going to get excited. Doesn't matter what the stock goes up by. It's always going to be like, well, that's your fault, not mine. And nobody's saying to put your whole account into one stock, but I'm just saying. So, so this is Clovis from yesterday to today. This actually happened very similar back on January 8th, went berserk, and we were there. So this, and I've been telling people, okay, went berserk, came down. It's a very defined pattern. But today was something very important, even though the stock pulled back. I sold it at the highs, and then I bought some strikes out there, higher strikes, because they got fast track approval for clinical trials for one of their flagship drugs. And that's big. So let's take a look here. So here we are, telling you all to buy options at 60 cents, 70 cents. You guys can always check that on your end. And those options go at one point were 220, and the system showed I sold it around 2. They went to, yeah, they went to around $2. Okay, so do the math. All right, and I put that out on the website. I mean, on the Twitter feed too. So you're looking at 0.6. Just to be exact, you're looking at 233% overnight. So what I'm getting at with some of you who are just obsessed, and I don't blame you guys because a lot of you are newer traders, and you know you keep on, you learn. You keep on chasing the same old stock. Hey, is Tesla up or down? Hey, is Apple gonna go up or down? Hey, is Facebook up today? Why not look around a little bit? Why not diversify a little bit on stocks which have great chart patterns, stocks which are showing you that it was going to go? Broaden your mind. Stop always trading the Apples, the Facebook, the Teslas, the Amazon, which has really been doing nothing. Amazon's very weak. Or Google. Open up a little bit. and your portfolio will grow very nicely. Stop being fixated on the same thing. Tesla only went up in a huge way, plus there was positive news because of the massive short squeeze. Now, how do we know whether the short squeeze is almost over? Tesla could drop 40 points in one day. The charts won't help you with that because it'll just suddenly happen. And you're fried if that's the only stock you're trading. So, just words of trading wisdom, like we say, okay? WOTW. All right, let's move on. So that's what happened. Now let's take a look at the options chart, see if I can drag it out. Bear with me 1 second. Favorites. Okay, Clovis. We had the 10 calls. All right, we had the 10 calls for February 14th. So here it is. Bear with me. Did it come out? Oh boy. Need to get rid of this. Hold on, please. Trying to pull it out of my other screen. See if I can drag it down. Yeah, so there we go. So here's your options chart, okay? So here were the calls, 85 cents, low was 64 cents. This is yesterday. And this is today. Okay? 60 cents roughly to $2. Monster, 233%. Just want to highlight things. You don't get 233% on an Apple call in a day. No, maybe once in a blue moon. You can get that in stocks like this. And there's multiple stocks which I can't spend half my night explaining because it's all there on the Twitter feed. Whether it be ABMD, whether it be AYX, Alteryx, get used to educate yourself in other names. Great companies that are flying under the radar. Okay. Let me guys show you this and I'll look at a few charts. Because remember, there are certain charts day traders are trading all the time. There's nothing wrong with that. But the algos know that too. So they do precision bombing on those particular options just to get people out. Because they know that the average retail trader is always trading the same stocks. Whether it be Facebook or AMD, NVIDIA, not that we don't trade it, of course. But how many times have you heard of CrowdStrike, which was a huge monster winner? Right? CrowdStrike told you guys to buy it. All it took was you had to have patience for a week. And the stock's got a lot of room to move. All it did, and this is the chart I kept on showing to you guys, all it did was it hit, let's take a look at the weekly. Let's take a look at the daily. So here's CrowdStrike. Calls are dirt cheap. And they were up, what, 114, 150% overnight, not to mention where we bought the stock. It's up more than 300% if you did a swing trade. And the stock still has room to move. I believe the stock will go to 70. Yep. And complete this pattern. Look at the volume. Constant institutional buying. Just with one red bar. For focus. I'm just trying to help you guys, all right? Not to say don't trade. Of course I trade Netflix and Apple and stuff. I'm saying can't just devote all your energies in that stuff. Because those are big boy stocks, and when the institutions come to sell it, they sell it hard. Yeah, Clovis had very low option volume. Yeah, that's the reason why we are frigging geniuses here at Clueless A Trading on particular selective position. If everyone knew that Clovis was going to go higher, there would be a lot of option volume. But we knew that it was going to happen, and I showed a beautiful, beautiful chart of like picture perfect like this. I can't, find it on the Twitter feed, which showed this happening, and that it was at a major inflection point. I shown that yesterday. You see, a lot of people go with option volume, which is fine. We do too at times. We like heavy options activity, open interest versus volume, like the Najarians always keep on talking about. That's how they make their living. But if everybody's doing the same thing, where's your edge? Think about that for a minute. Think outside the box. If everybody's lumping into the same stock at the same strikes, then where's your edge? Exactly. A lot of these biotalks, which give us like serious 60, 70, 80, 200+% type of winners, they have very light options volume on those strikes, but we're trading off the charts. So here, and then it just went up like this today. So the key is that sometimes, and Zafar, you have a mic, so instead of typing in, I don't have time to read all that stuff. Just ask on the mic if you have a question. You said, I have a question about position sizing on biotechs. Well, let me just finish. I'll answer that question. Okay? There are two things, and I explained this on the introductory session. Position sizing is dependent on how much money you're trading with, what your time frame is. So I really can't answer that question, if that's what you're asking. Like, what do you mean by position sizing? Just
Okay. Yeah. Sorry. I didn't want to intervene. But okay.
Oh no.
So,
Okay. No. Go ahead. No, not a problem. Go ahead, sir.
what I mean is like on certain stocks, the option positioning. What I meant to say is the bid and ask
It's very
prices
wide. It's very
yeah, it's
wide.
very wide,
It's
and
it's obscene. It's like it's like 2 to 4 or
yeah,
$1.70 to 3. Correct?
yeah. So in that case, like when I try to
Mm-hmm.
buy something, like
Mm-hmm.
sometimes I don't pay attention because I'm buying small amounts, starting small. But
I
I
always
noticed that
and just so you know, I always start small.
okay.
So it's not just you. So go ahead.
Yeah. So sometimes like you go in and you do market or the ask price, and then tomorrow what happens is that if the stock drops like 1 or 2%, then you're
Okay.
down like
So
50.
here is the answer to your question. All right. You never go with ask price. Never. You go for the middle. So let's say, for example, a option is trading, and these market makers and also algorithmic market makers, they're complete bastards. I've said this before. I'll say it again. They're the biggest crooks in the world. They try to screw options traders out of every single penny. Am I right or wrong? Especially on stocks which are biotechs, and especially on other tech stocks which are not heavily traded. Do you agree with me?
Yeah, absolutely. Yeah.
Yes, complete bandits. Like, how they do it, I have no idea. And it's still legal. So basically, they keep a spread, like so many of these stocks which have worked out very well for me. Even in CrowdStrike, the spread was wide the other day. So $1.60 to $2.60, you're like, what the hell? So what I do is I'll put one out. I call that a tester. Or I'll put two out, my initial testing. If it's 160 to 260, I will put it out around 2. You will notice immediately they move the bid to 2. They do it all the time. So now it's 2 to 260. So you say, then I'll move it to 210. They'll move the bid to 210. Okay? And when you try to sell it, they do the same crap. So the best way to do it is very small. I mean, by now I kind of have a guesstimate of what they're going to give it to me. In this particular case, most probably they're going to give it to me at 210. And once it goes into 210, you'll notice they'll drop it back to 160, and it's back to 260. Do you understand what I said?
Yeah, that was my question because I got caught. I wasn't paying
There's
attention.
nothing
Yeah.
nothing we can do. There's nothing we can do, unfortunately. Okay? It's complete highway robbery, but that's what these option makers do. There's nothing we can do about it. So in answer to your question, there is no answer. There is no answer. You just have to play around with it. You'll notice as the stock is starting to move, the spreads tighten. It'll no longer be this wide. They will most probably be 210 by 260. As the stock is moving higher and this options are moving higher, all of a sudden it's going to be 3 to 340. So it's starting to tighten because most of the time the bid to ask increments for most of these stocks are basically 20 cents, correct? Roughly?
Yeah.
Yeah, exactly, which is normal. 20 cents I handle. So there's nothing you can do. This is just live and learn.
Okay. Because
And if you
I think.
and let me finish. And
Mhm.
some people say, nah, I can't do that. Well, you can do that because the same freaking thing will be $6 because the stock just went berserk. It happens all the time. Now, another way, and this is options dynamics, another way that you can you figure out something's going to happen if the stock is starting to move up pretty quickly on some material news intraday, you'll notice that the option spread suddenly widen. Before it might have been a $1.10 to $1.50, all of a sudden you're going to see it $1.20 to $3. You're like, what's going on? And the stock is moving at that point because the machine-driven and the human options market makers want to screw you out of your money. So they want you to buy at the ask instead of toggling around in the middle to get a price because they know as the stock is moving higher, there's greed coming in, volumes coming in, so they keep on moving the ask higher and higher while keeping the bid somewhat low. Do you understand what I'm saying? So the way to do it is, like I said, that's the way I do it. Works for me. I throw it out in the middle. If I see a stock's really about to explode, and this is advanced trading, I know this $3 call is going to go berserk. We have had stocks within 5 minutes I've doubled
Yeah.
my money on the initial trade. Okay? Because the stock is just going boom.
Yeah, like that BA call you made. I think it
Sure.
was this
Like
week,
the
right?
BA call, or even today, things started to move. And it's going a lot higher. Smile Direct, SDC. The calls were kind of flat. Boom. They started to move higher. Turned my head, I had a bunch of calls. Boom. I said, wow. Okay, I don't say wow anymore because it doesn't make any difference whether I say wow or nothing surprises me about the markets. It doesn't matter. So yeah, it's a BA call. Boom, gone. But so those are separate things. So playing the bid and ask and trying to get a price in the middle. It doesn't have to be a low volume stock. It could be a heavy volume stock, but that's fine. Most of the stocks have tight spreads, like UNH, which was one of our biggest winners today. Huge winner. So let's look at a UNH option. United Health. I told people to buy United Health. The charts were good, and it's a great company, and the stock's going a lot higher. I told people to buy United Health when it was 200. All right, go listen to my old videos. I said these HMOs, the best swing trades and sometimes day trades. Which ones do we play? Anthem Health, ANTM. We play Humana, HUM, and we play United Health. So United Health, let me just try to grab the options here. I had the two.
288s, I think, right? 287 or 88.
No, not 287, 280. I had the 290s. So
Okay.
I had that. So I'm just trying to get that option on my screen. Bear with me 1 second. And the stock pre-market was down. It was down like $8. Not $8, $5. So okay, all right. So I had a few calls. I had 2 series of calls. Nothing too crazy, but nothing too small. Because I'm very bullish on that stock. So I said, okay, I'm going to lose that money. Big money is being made on Clovis. I'm like, okay, I'm going to be great. Clovis was huge. Okay, so so it was. So I'm like, all right, I'm evened out. The next thing I know, UNH is starting to move, and I can't even track the market that much because I'm in the middle of a meeting. I'm just looking on one of my iPhones. I'm like, all right, so I buy the calls like right at the open too. including the ones that I had. By the time the market opened, the stock was flat. So I am going to pull this up. Hold on. We had the 290s, not for this week, for next week. And I'm going to show you what it did. Show everyone what it did. Bingo. So here was Tuesday. Today's Wednesday. Here was Tuesday. Told you guys to buy the calls on United Health at around in the afternoon before the market closed at around 4. The market opened. These calls went slightly below Wednesday morning, slightly below 4, and then just went bang because their conference call and everything was fantastic. So the options just went bang. You could have still bought it. They at that point they're around 8. Then they dropped down to 5. You can see that 5 and change, and then they explode higher and go to almost 11. Went to 10 and change. Now, generally speaking, I get a big move like that. I was pretty much out of United calls right here, and then I bought some out of the money strikes because at this point I am in the money. The stock is well above 290. So I'm like, why should I be sitting on 290 calls? And this is something all of you should just know, like natural. If you're above your strike, you take that nice profit and you buy some higher strikes. It's not rocket science. I'm going to buy the 300 strikes because I'm already above 290, 95. Well above 290. So that's what you do. And if you look at what the stock did, so this is what the option did. They went from a little less than 4, I'll call it 4, to $10. Beauty. Beauty. And you still had time to buy it during the day. And I wasn't here or else I'd have guided, this was the ultimate reversal trade. Because I love reversal trades. Especially in powerful companies. When they reverse, they eat and demolish the shorts. It's a very horrible scene. If you imagine shorts being just shot, like a genocide of bearish shorts when a reversal trade happens. It's very ugly for the shorts, very. So this is what happened. 6:45 in the morning, 7 in the morning. The stock basically comes all the way down to 283. I'm like, okay. Then I start to see 7 in the morning. The stock's turning. By the time it's 8 in the morning, the stock is already slightly higher from the previous day's close. So I'm like, oh, that's nice. That's at 8 o'clock. Then, so this is at 282. So I'm down $5 on it. I'm like, okay, I'm going to take a hit on those options. I'm not going to lose it all, but I'm going to take a nice hit. Maybe it's down 60%. And then this exploded. The stock exploded. This is the stock, guys. All right. Obviously, you see the price here. Market opens at 9:30. Stock's here. At that point, the shorts are just like, holy cow. We thought we had a monster in a 5 point down, 6 point down short, and bang, takes off. And the stock is still going higher. I told you guys to buy the 300s. Not going to even ask who bought it or not because it's none of my business. This is one heck of a powerful chart. Okay, that's a gap fill here. And there we are. This is your rising wedge. Points to 310, 307, and then to 317. Will that happen in one day? Yeah, maybe it can. But this is a serious bull flag. And this was when the stock was getting hit 2 days ago. We weren't in that trade at that time. On the 13th, Monday, they were selling these stocks like crazy. Why? Because Bernie Sanders is going to be the president of the United States? I don't think so. Because Bernie Sanders wants to basically, he hates health insurers. Okay, so these guys don't like him. So this was a bad sell, and then boom, they took it. It came to that gap. That's the red dotted line, and boom, it turned. And this is where I told you guys to buy it. So now it's ready to go, technically speaking. And what's ready to go? That means it's a high around 300 and change, and then 305, 307. So you could buy very few of the 300 calls, not for this Friday, but for next Friday. You don't have to go like all the way out to February. This January 24th is good enough. Because this is not a stock that moves $1 or $2. It moves $4, $5, $6. Sometimes it moves $1 or $2. Okay, I'm gonna show you a different chart. This is my.
I'm looking at, because this is a broad.
One second. That's one of my old videos that came on. I'm like, wow, I hate my own voice, so I'm like, that's crazy. All right, so here's your predictive analytics. What I can read the tea leaves on the SPX 533. My advanced coaching session students know very well what this is. I do have some explanations of that, I believe, on the new member introductory playlist on Google YouTube. This is telling me momentum is starting to slow down a little bit in the market for obvious reasons, because the market, how much can it go? It's like keep on going forever. I mean, come on. We need a flush out, and it's coming. We need a big flush out, and we're going to be ready for that. And if you guys are not, if anybody who's going to listen to this are not a Clueless Day Trading, I can assure you, you're not going to be ready for it. There's a big one's coming just to flush out. Flush out the late buyers, the mom and pops who finally come into the market, because nobody's really in the market. Look at traders. Most of them not even trading. They're sitting around making excuses. So, hey, that's their business, not mine. So, bottom line is that we have, so the flush out's coming, and it's going to be very quick, very fast. So saying all that, this is a loss in momentum on the MACD. You can see that. Oops, sorry, let me change the color. So I'm just reading the tea leaves. Loss in momentum while the markets are climbing. That's a negative divergence. The same thing we can see with the RSI. The RSI is kind of it's kind of slowing down. And the first moves always come when the big stocks get hit, right? So markets were up in beautiful amount of points. Was Apple up? No. By the end of the day, it was nicely negative. Tesla was down 18. Amazon was down 4. But specialized tech stocks were up. Shopify, Trade Desk, Nvidia was down. NetEase was down. Roku was up earlier, then it was down. So it's not, that's what I'm saying, broaden your horizon a little bit. So the bottom line is that we have negative divergence in the market, telling us that the momentum in the market is starting to slow. Nothing crazy, but that's okay. If we look at that, if we look at the weekly of this of the SPX 533, which has been extremely right pretty much all the time, there is no slowdown on the weekly chart. Is this scary? Look at that. And let me make this a little bit longer. Let's go back 6 months. This is the part that short term will get a flush out, but as we move along, the market wants to go higher. So this is what the weekly telling us. I can read it very quickly, but maybe some of you can't, but I don't blame you. Look at this. The bars are still expanding. The MACD histogram bars are beautiful. That shows a lot of underlying strength. A lot of money is coming in, but mom and pop's not there. Most retail emotional traders are not there. So that's good. So and the RSI is moving sideways at serious overbought levels. And this is your candlestick since October. All right, so there you go. So that's my quick read. Short term, we're going to get a flush out. And then as we move into the first quarter in March, the markets still look very healthy, meaning there's still room to move. Once you get a flush out, the market will attempt to take that old new all-time highs, and let's see whether we can break out more or whether we're going to pull back. I think we pull back. That's my opinion. My charts are very clear on how far we can go. We can go 3,300 we hit today. We can go 3,350 maybe. So I'm not going to repeat the same things that I've explained and shown on my charts. Let's take a look at the NYMO. This is extremely important. This is extremely positive short term. Why? Look at this. The full stochastics is turning, and that's fantastic. So that means, and the upper Bollinger is at 50. In other words, if the New York Stock Exchange oscillator, the NYMO, hits 50, you want to short the crap out of the market, just the way you want to buy the crap out of the market at -40, -50. If for some reason, I doubt if it's going to happen, over the short term, we get that overbought and it's showing anywhere above 30, 40, 50, you can just lump a crap load of money buying puts and you'll make a crap load of money within 1 or 2 days or within a couple of hours overnight. All right, just very simple. It's very simple. So saying all that, so this is where we are. When this got this overbought back in September, we had a huge correction, 2,000 points. So these are the sort of the tea leaves that I read. This is looking very good short term. That means the market still has a lot of juice, and the stochastics are not overbought. McClellan oscillator is still not short term overbought. Let's take a look at the same thing on a longer term view on the weekly. On the weekly, it's kind of a mixed picture. We're starting to buckle down, and the McClellan oscillator made a lower high versus the previous move, and we are at all-time highs. So that means there is a negative divergence going on. It's kind of a mixed picture, but let's see. Throw out a stock or two because I am going to wrap up. Futures right now are up. Futures are, excuse me, sorry. Futures are up about 3.5 points. It was a great day today. President Trump did his job. Very successful phase 1 trade deal meeting. The skeptics are all over town like, it means nothing. It means a lot. Remember, it meant a lot when he said he was going to put tariffs on China? Well, now they have a negotiated deal, and slowly but surely the tariffs will be reduced. So why isn't this mean a lot if the other thing meant a lot? Meaning like, when he used to go nuts on Twitter blasting China and put tariffs here and there, and the markets would fall 600-700 points. Did you guys forget those days? So, because humans are not really wired to look at good things. They always look at bad things. Well, it's a good thing that happened, okay? Just so you all know. All right. So throw out. Anyone have anything they want to look at, or they just don't care about the market?
Hi Frank. I wanted to check. I know you've been mentioning blue, and I really like the chart. I see like an inverse head and shoulder, but wanted to play the February 21st call options.
February, March calls are terrific for blue. Blue is a serious chart, but it's a biotech stock. Biotech stocks don't always track the exact patterns as tech stocks. Okay. Biotech stocks have a kind of a different characteristic. You know what I'm saying? You're married, right?
Yeah.
Before you got married, like before you met your wife and stuff, and your lovely wife, you dated some other girls?
Yeah.
Okay, remember some of them were really wacky after you got to know them after like 3 or 4 months or 3 or 4 weeks? They just turned out to be a totally different type of animal than you knew, right?
Yeah.
Exactly. So that's what biotech stocks are, all right? So you have to handle them delicately. Blue, I know a lot about blue. I made money on blue many years ago. This is Bluebird Bio. I did a lot of research on the company, and I suggest everyone do that. They are on the cutting edge of CAR T therapy, and there are many companies like that. So it's a very competitive business. CAR T is cancer cancer therapy. Okay, so they are very targeted, innovative technologies. So the stock used to be a very hot stock, was all the way up to 160, 163, as high as 236. So when you look at the longer term picture, you're like, wow, look at that. The stock went from it came public 65, just shot up like a monster, and this was back in 2017. 2018, it had a pretty sharp pullback in between big moves, and then it had a massive run up on at the beginning of the year. I'm sorry, yeah, beginning of this year, beginning of last year, 2019. No, 2000. Yeah, to January, from Christmas of 2018, it had a pretty big run up. So I am looking at the daily picture here. The daily picture, yeah, the pattern's fantastic, and the stock and the company now is far below what it used to be. It used to be 236. Even in this frame, which is only going back to last 1 year, January of 2019. So that's the time frame I'm looking at. So if you want to do a technical analysis type of thing, this thing has a kind of an inverse head and shoulder. I would call it a cup. Watch. And a handle. The downtrend line hits itself at the 50 Fibonacci retracement, which is normally where stocks go to once they're having a reflex bounce like it's having. Okay. So what price is that? 116. I have a pretty damn good feeling the stock's going to go to 116 as long as you have a little time in your hand. And it's just going to happen fast because it's at $90. It doesn't take much for a biotech stock to get a FDA expedited clinical trial or a approval of one of their drugs, or a very favorable presentation at a healthcare conference, which are happening this week and next week. JP Morgan, I believe Piper Jaffray also. There's some big healthcare. The JP Morgan Healthcare Conference is serious stuff. Okay? You want to go there with your best foot forward. So that's happening now. So the bottom line is, stock could pop up $16 in 1 day. Now, at the same time, the risk is that technicals look all fine and good, but then it can, for whatever reason, it can just fall fast. So I'm hoping not. So you have to have, when you look at the biotech stocks, you got to do a basket strategy. You look at 6 or 7 of them and you buy whatever amount of calls you can. Just buy 1 call of each. You can have a basket strategy. So if any one of them blow up, you don't get hurt. But any one of them go boom higher, you make money. So looking at the megaphone pattern, it all points to the same level, 115, 116. So that's your answer to your question. The pattern is fantastic. Now, the other factor, which is the exciting factor, the unknown factor, is what? These guys are serious buyout candidates, because Big Pharma, and we have caught a couple of major buyouts in the past 2 years, starting with Juno Therapeutics. Then most recently was Medicines Company, MDCO. And in buyouts, it's like winning a lottery ticket. You got a $2 call, you're selling at 20 overnight. So Blue has been mentioned, Bluebird Bio has been mentioned many times. So is Clovis as buyout candidates. A big pharma doesn't want to start their own research departments and start a whole new line of innovative drugs. Why not buy a company which is all the way in the game and already has a proven product? It's quite simple. So that's it. So this is a buyout candidate. Technically looks good, and so far good. This kind of stock, I'm not a biotech specialist. There are guys there who live and breathe biotech. StockTwits has great information on the biotech. There's some guys who know every single detail. Fine. A lot of times I go there for a quick info on a particular stock that I'm looking at. This is a serious stock, Alteryx. They're actually the cloud computing for biotech companies. Look them up. Have you ever heard of the name Alteryx on CNBC? No. Did it work for us? Yes, and still working. So that's the type of stocks you want to look at. So this is serious. The stock got smashed. from 250 down to 80 in September, and now has created a fantastic inverse head and shoulder. And now this is your neckline. This is classic textbook. And now it broke out over that. And if it stays above the neckline, above this neckline, there's your neckline. Oops, let me change the color. Right there, this white line. It's not hard to see. Here's your inverse head and shoulder. Wide swings. That's what I like about these stocks. They actually tend to, for options, you need stocks which move in larger numbers, right? $4, $5, $6, $7, $8, $9, $10. Unless it's a $20 stock and it moves $1, yeah, you make some money. But if it's a $100 stock, if it moves $2, you make nothing. So bottom line is, here's your neckline. It broke out over the neckline. So if the technicals gave us 100% of the answers, which they don't, they just give us a very good roadmap, then we could pretty much say that based on this uptrending channel, the stock is going to go to hit 150. Again, another buyout candidate. If they do get bought out, they're going to get bought out more than, they'll probably get bought out at 160, 170. But this is a good looking chart. The other one is, there's a bunch of them that I keep on. ABMD, stock got smashed the other day, right there. It was moving up real nice, and then and then all of a sudden it gapped down from 181 to 156. We had taken some profits earlier, but we still had some cheap calls, so we just boom, they just disappeared. It's a massive downtrend line here. I should have that in. It's actually a big falling wedge, but anyway, it's still a downtrend line. And guess what it did? It actually hit that downtrend line. One second. It hit that downtrend line on the 10th of January, and then the next day this happened. Now, when it collapsed all the way, I told you guys to buy those calls at 70 cents to $1. They went today. I told you guys to buy the February 21 220 calls at around $1. They went to $2.20 today. So in 2 days, first day, second day, on the third day, you could have had 110% return on your money just playing this reversal, which by the way is very bullish. The reason the stock fell was they gave a guidance which was slightly lower than their previous guidance. But buyers came in, and that's how smart money looks at it. The stock fell, but created a beautiful hammer with massive volume. This is the highest buy volume or green volume bar detected in months and months and months. Look at that. The stock fell, created a beautiful hammer. This is a very bullish setup. Smart money said, wow, I just got a bargain. Let me go grab 4 million shares of this stock, and it bounced from 155 and closed that day at 169. That's 14 points, guys. You can play these reversal trades all day long. And then it's moving up. Now, is it possible it goes back to 186? Yeah, it is. Based on the volume, based on active buying, short covering, and the candles. And the stock, can it go up all the way to 222? I have no idea. All I'm saying, I told you guys to buy the 220 calls when the stock was at 160. That's $60 out of the money. And those still doubled. Think about that for a minute. There's $60 out of the money, the 220 calls. With enough time left, Feb 21st. Okay? $60 out of the money. Told you guys to buy it around 160. It was $60 out of the money, OTM. And they still did 110% in 3 days. That shows a lot of great implied volatility, great elasticity. In other words, the options move very well with the stock, even when it's $60 out of the money. Do you understand what I just said, guys? Yeah,
Yeah.
exactly. So that to me is exciting. All
Um,
right, throw out one more stock, so I gotta wrap up.
Okay, thank you. One more is Snap. I look at like the long-term chart. It looks like a
Of
huge
what? Of what?
inverse head and shoulder.
What?
I
Hold
really
on.
like it.
I didn't even hear the symbol. What stock?
Oh, Snapchat, Snap.
Oh, Snap. Yeah, 1 second. I didn't hear that. Wow, this is a damn good looking chart. I haven't actually traded Snap in a while. This is a very good looking chart. See, the chart was already drawn because we had traded Snap a while ago. So this was a Fibonacci retracement of Snap from its previous high, which was $30, right? I think that was the all-time high of Snap, right? 30?
Yeah.
Yeah. So
Here, up here.
looking at this here, the stock, yeah, the stock has room now. I'm just following the Fibonacci retracement. So the stock has room basically to move up to 24. And here's your uptrending channel. So if the stock breaks out over 19, then it's back in this zone. See, this is the channel the stock was trading in before it fell apart, right? And so now this is a very good looking chart, and the stock could, the stock could very well be at $25. I'm definitely going to write this down and remind me tomorrow also, because the options are cheap and
Yeah,
they
it's
move
very cheap.
and they move. I know they move with the price. Like stocks up 10 cents, your options move too, right?
Yeah, and it looks like a huge cup and handle to me, that the handle that you drew in it.
Yeah, let me see. So what I was saying, yeah, I'll do that in a second. Yeah, it is a very large cup and handle, and it's a very, excuse me, sorry, it's a very defined chart. So if it enters this zone, the stock will rapidly move, rapidly move. So here's your cup and handle, as you correctly pointed out. It's also an inverse head and shoulder. There's your head. Here's your left shoulder, right shoulder, breakout. Then again, another a nice cup. So you can do a cup and handle. Here's your first handle. Here's your cup, second handle, and now it's breaking out. Good looking chart. Good that you brought it to everyone's attention. All right. On that note, I got to wrap up. See you guys tomorrow. Final word of caution. Markets will do funky stuff. Now that the China deal is out of the way, the next, and I mentioned this on the Twitter feed, the next target for President Trump in the way he negotiates and does things is Europe. And they are kind of less important to us, but also quite important in the sense that we do a lot of business with Europe, especially with Germany and England and France. So if he starts to be tariff man with Europe, the market short term will fall. And that could be one of the catalysts for the market, negative catalysts for the markets to have a nice correction. Okay. And he's going to be in Davos next week for the big, I think, G7 meeting. And I can't remember, or the World Economic something meeting. So the Davos symposium. So the bottom line is, just got to be, we have to be a little bit careful. No one's happy, which is a good thing. Everyone's stressed out, which is a good thing. I'm always stressed out. And when I'm trading and stuff, I'm always like very, very focused, and I never sit back and say, wow, this is easy. It's never easy, guys. It's never easy. That's why 99.9% of traders don't make it, because they don't have the mental strength and discipline to be a tactical trader. And that's why emotional traders blow up, and they make all kinds of excuses why they can't do it when they can do it. So saying all that, stay cautious, stay long, be selective. You got a nice profit, take it. Don't extrapolate too much from charts, because the markets are weird beings. All of a sudden, the chart can look very different. But we're still in this smooth fly zone, in my opinion, till February 14th or so. In between, we will get a couple of 300-400 point down days, but we should be smooth sailing till Valentine's Day. After mid-February, things could get quite rocky. We're in earnings season right now. So the overall earnings guidance picture from the big companies, which have been so far pretty good, Even Goldman Sachs, which was down a lot pre-market, came back and went positive at one point. I told you guys to buy BlackRock. BlackRock was a very nice winner. Stock was up 14 points at one point. Okay, BlackRock is the world's largest asset manager. So the key is that overall pretty good. JP Morgan delivered strong numbers. Bank of America, those cheap lottos didn't work out. They were down. So the next set of earnings coming up over the next week or two will kind of give a determination whether or not the market earnings can, well, the market valuation where we are right now on the overall market is justifiable. If earnings guidance is pretty strong, in my opinion, I think earnings guidance will be good. Now that this overhang with China has been removed, why shouldn't companies feel a little bit more optimistic about prospects going forward? Just common sense. But if you listen to the analysts and say they're like, no, that's not the case. Well, they've been dead wrong, and let them be dead wrong. So don't get too happy, but try to focus on charts as much as possible. I'll try to put in my 2 cents as much as possible, and don't always stick to the Apples of the world. Apple pissed off President Trump today because they wouldn't unblock based on their own principles. You know, the phone of the Saudi guy who Air Force guy who shot in Pensacola. So Trump tweeted out against Apple. So, you know, and Apple, like I said, was going to go to 320 and the stock went to 320. What, I mean, this chart was drawn weeks ago, ladies and gentlemen. So what? The stock just keeps on going higher? Sure, it can. But before that, it needs to correct. So I would be a buyer of Apple, honestly speaking. If Apple falls to 300, that means the market's down 600 points on a certain day, or 400 points. So let's get a little pullback on Apple and stuff. Have a great evening, guys. I'll see you guys tomorrow. Good night.